All right, so let's get going. After Labor Day, we're in the home stretch, the last half of Q3, then the fourth quarter, September, October, usually busy months, busier months, more volume. We've got the Fed on the horizon. What changed since the last time we met, if you're not in the trading room, has been the unemployment report on Friday that came in a little lower than expected, so that pulled the Fed back as far as hiking at September. And a relief rally is the best way to explain it we had on Friday. We had a nice test of 73 quarter today, Tuesday, really the first full session back since Friday, and now it's back up and away through Friday's close and through today's open. Bulls took the leash, as I showed earlier before I hit the recording button. But anyway, this is an important kind of meeting for guys, and it kind of maybe even early on, it depends. I mean, early on in a track, we could have done it, but a lot of you guys are you could always make these tweaks and know where you're at. Some of these things are important. I don't even share with trading room guys because you get a lot of questions that I wouldn't want to waste time answering with them. So we'll just put it in a kind of in a webinar for us, and then you guys could share some of the things in the edge room and things like that. But what's important about trading as a business is it has to be treated as a business. You have to have a boss. Every business you have a boss. The CEO has their board of directors. Board of directors have their investors. Someone always is accountable to someone else for something to work. If you're a one-man show, which is what a lot of independent traders are, there's not a lot of accountability there. So there has to be. The Edge Team Room kind of creates some of that if you do some review sessions with other guys. But you have to have someone to say you stink, right? If you don't have that, you're not going to get better faster. You're not going to stay good when you're trading good. You're not going to get out of a run ASAP. You're just going to flounder around and give yourself excuses to pat yourself on the back. So it's really important to have some accountability. In a prop environment, you had that risk management or risk manager, other traders, the owner of the firms, things like that. But for today, and this won't be a very long meeting, but an important one, you have to set realistic expectations. You have to know that there's going to be costs involved, just like when you drive to your office, when you had another job, or you had marketing, or you had employees to pay for. What percentage of your give up is enough? Meaning, after you're making money, what's enough is enough percentage-wise when you include your commissions and everything, including some monthly expenses you're going to have with software and rooms or things like that. And then trading account size. What's a decent trading account size? Let's start with realistic expectations. Most people have unrealistic expectations. They stink in this department. They get made aware of this business and they get big grapefruit eyes as how much money they're going to make. Like walking into a casino, all the bells and lights and whistles and people cheering and everything like that. The upside is sky's the limit, but you got to be realistic to what you're going to trade. And most people get doomed before they even start because of being totally unrealistic expectations from a monetary standpoint. Rule of thumb, per one contract you're trading in the E-minis, you should be happy with 8 to 10 ticks of profit. Not per trade, per day. Not per trade, per day. So if you made 10 ticks, what size do you trade? One contract. That's a good day. You might have days where you make 50 or 100 ticks. That's an awesome day, but it's not realistic to maintain that as a one-lot trader. You've heard me say it before. I'll say it again. Most people will have an unrealistic monetary goal and then will try to apply a strategy to a goal that was never realistic in the first place. Good luck. Everyone wants to make $5,000 a day, $2,000 a day, even $1,000 a day to stay above average to what other people make, and that's great, but you're not going to do it with one contract. What you'll do is try to force a setup that's really difficult to implement. And you start looking for what? Bigger profit targets. You look for bigger profit targets, you increase your emotional capital. You increase your emotional capital, you start pressing, and all of a sudden you're not even trading the setup. Another rule of thumb is trading your round turn has to be less than what your profit potential. What does that mean? Is I'll get into this with commissions, but you have to have a round turn can't be too much, can't be too close to what your profit potential is and your expenses. So let's get into that. What are your costs and commissions? First of all, your broker is the one charging you and making money off commission. So you got to know you separate your fees. As a guy who's trading, you got to know this. You can't just be lumped in and have a broker tell you, well, here's your costs, and you got to know this, and it's pretty simple. Commissions is how your broker makes money. That's what they charge you. All right? The exchange makes money on what's called exchange and clearing fees. For the most part, the CME controls both, so they double dip. Your biggest fees are exchange fees, and the second biggest are clearing fees. Your third is whatever your broker charges you, and then the small couple cents a round turn is the NFA. They dip into it as well. Are they negotiable? Sure they are. The more you trade, the more you're around, the more active you are, the bigger your account, maybe the more aggressive commissions you could get. As far as exchange and clearing fees, maybe leasing a seat or an electronic corporate membership. But the requirements for what electronic corporate membership used to be have changed, so you're going to have to research what those changes are. A seat lease isn't as much as they used to be. And if your commissions are eating in, commissions and your fees are eating into your profits, or your break even but minus commission, you're getting killed and you're not able to stay in the game for as long, then you have to think about how big you're trading and whether or not to lease a seat is appropriate. There's like a one-time $1,500 fee, application fee, and then it's only a few $100 a month to trade the ES. That's not bad, but do your homework to see where you break even, if it's worth it. For many people that are trading every day, it's worth it if you're trading every day. So you have to make sure it suits you, but it's a really important business decision to make at the appropriate time. But know that it's a decision that you can make to really greatly reduce your fees. I don't want to get into the numbers of it all, how much lower your fees are. Remember, your commissions are between you and your broker. Your exchange and clearing fees are between you and the exchange. Some brokers put an overage on clearing and exchange fees. It's not just a pass-through. Okay? Just know how that works. Most brokers are pretty fair, but remember, some aren't, right? It's like anything else. But you can negotiate commissions based on how much you make trade and the relationship you have with your broker, size of account. If you got a $1,000 account, you're not going to be able to have much leverage. Most of you guys got much more than that in your accounts, though. Exchange and clearing fees, how you negotiate those with the exchange is to lease a seat, and your fees greatly go down in the ES. Again, you could see a schedule or a table of those fees with or without it, but when it comes a time to make that decision, you'll see, depending on how much you trade, is it worth it? I think if you trade any more than 30 or 40 contracts a day, it becomes worth it. Because what you end up doing is saving sometimes $2 a round turn. So that's $50 a day. You could see that it doesn't take much to make up the $300 a month you're going to be paying in your seat. $850, Dave? Okay. $425, he's saying a month. So 400, if you're a one lot trader, 425 trades. Oh, I see what you were saying. I thought you were saying 850 a month. I'm like, I don't think they're that high. They're around 300. It fluctuates around 300, but that's where you're going to be about for the seat lease. Dave was saying 850 sides or 425 round turns breaks you even. So that's a good rule of thumb, and it brings your what it does. It doesn't adjust your commission. Your broker's going to charge you what they're going to charge you. It's going to adjust these two fees down and down a lot. What right? And here's a good point. When you become, Dave, you didn't say it, but your data fees go up because you become a pro. So stick around. When you're around 425 a month, you start consistently trading above that. This is a decision you can make. It's going to be hard to trade more than that unless you're profitable. But the goal here for everyone is either to stay profitable for those that are, to get profitable for those that aren't. And this is a decision you're going to have to get yourself in front of because it's a good problem to have. But just know there's a way to greatly reduce your costs of doing business. So you've got a lease on an office for you guys that have been in other businesses, but the better you do, the lower that lease goes down. It begins to snowball in your favor. None of this means anything unless you guys take it serious to the point that you have some accountability, though. You have to have someone to talk to say, is it worth it? When is it worth it? Am I going down and going back to just reviewing what you're doing? Most of the challenges guys have is that 99% of you have been successful and kind of been the boss or a higher level in some other business or company. So you had accountability, but now you're on your own. You're used to being the guy. Now you got to go down a couple rungs before you become the guy again. It's just life. And just because you're a great doctor or a great accountant or a great CTO or CEO or you had a great run at flying airplanes doesn't mean you're the captain of this plane. You're serving drinks in the back. Not even in the front. You're in the back serving drinks. Let's move along. What percentage is enough? How many guys get sick and tired of having a good day and 3/4 of it or half of it's eaten up by commissions and your fees? So how big of a partner do you want? That's a question you're going to ask. You're going to have a partner. As true in any business venture, you have a partner. It might be those charging you to advertise, might be those charging you to work for you, might be your landlord at your office complex. Everybody wants a piece of what you're making. It's just business, period. Trading is no different. Even though you can do it out of your home office and save a lot of different costs, ancillary costs, you're going to need some partners. This is a good rule of thumb. About a quarter to a third of your profits go towards what your commissions end up being. So just simple math. If you make $1,000 and you had to pay about $350 in commission and everything, that's not bad. You go home with $600-700 out of $1,000. Just a rule of thumb, you're not going to get beat up. When I start, and this is part psychological, when I start getting beat up is when half or more start going to the house. And you got to remember, when I started, I gave 50% of my profit up. It wasn't after commission. It was after commission. So it wasn't like I had to eat commissions. No, all that came off, and then we split it, which made it a little bit more fair. But we had big partners. Trading account size. I tell this to people all the time. Sometimes you have too much damn money in your account. It's not just how much do you have in your account? It's not just being underfunded is my point. You could be overfunded. There's a sweet spot, and it's slightly different for everyone. It shouldn't be $5,000 or less or $10,000 or less because then you are underfunded, but it shouldn't be over $100,000, $200,000 unless you're trading monster size, which most aren't, and even if you are, that's probably more than you need. So you want to have a sweet spot in your account. And you never want to feel like all of it's at risk. You know, when you're opening up an account or you have money in there, it doesn't mean that you're going to blow all of it before you decide this isn't for you. Big accounts, in my view, are over $60,000, 80 grand, 100 grand. Forget about this having 250 or $500,000 in it. It's not necessary unless you're backing other guys and you have a few guys trading segregated accounts under your account, or you're trading even 50 or 100 lots. You can get up to that size with a manageable $50,000, $60,000 account. The leverage that they give you when you open an account can change once you develop a relationship. Brokers will give you a little bit more rope once they see how you trade. But you're leaving money there. It's not so much the risk of the MF Global PFG days. I think those days are behind us. I think most brokers are pretty safe, especially with how the regulatory environment caught up because of those two brokers going under. So it's not so much how much money you're going to have at risk with a broker. It's more or less you don't need that much money tied up. Plus, the most important part is you think you've got, you tend to hold on to losers maybe a little longer because you got too much money in your account. You tend to maybe add to losers. You devalue money. You overvalue money, and everything's too important when you have a small account. You devalue money when you have a big account and you're overfunded. Overfunded is also a problem. It's better to be overfunded than underfunded, don't get me wrong, but overfunded could hold and tend you to devalue the down days you're having, could keep you in a rut a little longer. You're not anxious to get the hell out of it because it's really not subtracting too much money out of a $100,000 account. Being down $1,000 isn't that big of a deal when your account shows 99 versus 100. But you're down $1,000, you're trading one lots. You stunk that day, you know, and maybe you lost more because you had more in your account. So you got to make sure you're not overfunded. And you got to be smart as far as 8 to 10 ticks per day per one lot. And then if you're trading and 60, 80% of your, let's say your up day was $100, right? And you're trading one lots. That's a good up day. But 60 of it went for commission and fees. Well, you overtraded. Another big rule of thumb, big account doesn't mean, this is another problem with being overfunded. Big account doesn't mean you could trade bigger size just because your broker allows you to. Just because your broker allows you to trade bigger doesn't mean you have earned it. Who gave you the right to trade 20 lots when you couldn't make money with one lots? Only because your account said you could? And I know there's guys guilty of that. I know there's guys that are guilty of it in this room today that have traded bigger for no other reason than they had it in their account. Pay yourself. Even if you're down for the year, if you have an up month, pay yourself. Know how it feels to tell your broker, send me a check, wire me the money. Small or medium or large, but pay yourself if you had an up month, even though if you're down a little bit. Know what it feels like to draw a paycheck for your efforts. And then everybody's different in the way that they're going to keep their own books. And there's no real, that's why I'm not giving you a real kind of cookie cutter way to do it, because it's got to slightly be subjective. And that is, if you got, let's start at 50 grand. I think 50 grand is a decent sweet spot to have in a trading account, especially knowing most of you guys. I think that's a decent amount to have. And if you're up to 60 at the end of the month, take a check for 10. If you're up 60 and you want to make sure it's above 50 and you want a little sweet spot, take a check for 8. Now, I know these are good problems to have because we're talking about it from the point of making money. But even if you're down, you started with 50, you're down to 40, but at the end of that month you're up to 43, pay yourself $1,000. Yeah, it went down to 42, but don't think that you can't pay yourself until you get back over 50. I'm using 50 as a number just for example's sake. Does that make sense? If you had a green month, pay yourself. That's the beauty part of having a sweet spot, having a balance in there where you're not, you can pay yourself a couple grand and you're not down to $2,000 in your account. But pay yourself, it'll do a lot for your confidence and the question of, can I do this? And I'll go a long way answering that. Monthly expenses. We had them, even though we might not have had them separated, and in some cases they do now. Prop traders have desk fees. Sometimes they're $2,000. Sometimes that covers charting. Sometimes it doesn't. Sometimes they're charging you for their resources, for their use of their space and things like that. All prop firms are kind of set up slightly different. But don't kid yourself. We had them. We didn't have desk fees when I started, but we had the 50% of your income was going to the house. That was a fee. Our chart software was paid for, but we had it. That was, part of the giving up 50%, paid for your charting. Your front end fee was not covered. You got whacked for that out of your end. And that was pretty high. It was about $700 and up a month for TT back in the day. And so there were fees. I don't have any sympathy for people that complain about fees because we had bigger fees than you guys are starting off with. Whether they're charting fees or education, you guys have gotten past some of the education fees with this edge. Should be in a trading room, should be in my trading room every day because it obviously keeps you in touch with me, with us on a daily basis. But that's got to be part of what you're spending each month. I think, I don't have that in here. I thought I did. I think a sweet spot for an expense charting now, the way it's come a long way, but I think the free stuff you get for charting isn't comprehensive enough. I think you got to spend what you probably spend for Market Delta. I think that's a sweet spot. You start spending $500-$600 a month for charts, starts to get into be too much. You're starting to spend $500-$600 for a platform, too much. Those days have since passed. A couple $100 is a sweet spot to pay for charting. For a room, that's subjective. I mean, my room is obviously very inexpensive, and it's a cup of coffee a day, so you should do it. You get into some of these rooms that are $400 or $500 a month, you better know you're making $500 a month to cover that. And that's a big issue people have. Underfunded, overfunded. They're not anticipating the fees and expenses that this business has. But you can pare them back. Realize that what the commission you're paying in the $3-4 handle, which is most of what you guys are paying, I would imagine, can come down a lot by half. Mike, what are you paying again? Under $2 a round turn, all in. So you could see that you could dramatically decrease your expenses. So don't get disappointed or discouraged. When you get in, you could see he's 192, all in to be exact, for the ES, right, Mike? And it's even cheaper for bonds. But you don't know there's a difference between, and I'm not even going to get into it because at this point you guys have surpassed all, guys that are in this room are all Edge members or in this webinar, so you've surpassed all the fees you might have spent or paid, some in education, some in rooms that were, everything was worthwhile though, because you got to compare it to something else. You got to know sometimes you've done what didn't work before you found what did work. I had to. I paid a lot of money, be a member, have a seat and everything else, only to not be able to make money in the pit I started in. And I was able to blame the pit, but I would have been blaming myself had I got bounced out of the business just based on I couldn't make it in the first pit I tried or the first contract I traded. If I'd have called it quits then, I would have been the failure, not the pit. I was blaming the pit, rightly so. It was a tough pit to make money in, but I asked the right questions, and I found a place to launch my career. But it was not, expenses were not elusive, trust me. Some guys are doing really well. I mean, I heard from a guy that he had a big down month, and I says, wow, I said, but what are your up months? And his up months were bigger than his down month, and he got almost all of it back in a day because the markets were kind of busy. I think it was Thursday or Friday. That's trading. He was down quite a bit, but it matched an up month, and he was able to get it back in a much shorter period of time than it took to lose it. The problem with trading plans, Tom, this is not Tom K from the room, it's another Tom, Sheriff Tom. And everybody talks about how he should have or you should have a trading plan, but he has great difficulty creating a plan that is comprehensive, but that I can believe in and therefore adhere to. And so this is not a trading plan, but setting it up as a business. The problem with trading plans, I can tell you this right now, is that trading plans are not good for every condition the market might be in. Different plans are good for different market conditions. Therein lies the problem with getting confident with one particular plan, because it works great, but when the conditions change, you don't adjust. Not necessarily you, Tom, but most traders don't adjust. One plan is not going to be congruent for all market conditions. You got to tweak it. The only thing that's congruent is very short-term trading, because when it's slow, you're backed off and you're not going to trade. When it's busier, you're going to trade more. It's scalping, but scalping is tough to do every single day because you're competing with some high-frequency machines and things like that. But you just back off of it when the market is not trading, isn't volatile. You trade less, go into capital preservation mode. But then trend traders get stuck in rotational markets, or when the trends goes right against them. They're uptrend traders, or they're long and it's a downtrend, they're fading it. Something always is going to come and bite you if you don't adjust to the market adjusting. So if you trade the same every day in August, you got killed. If you were a breakout trader, I should say, and you traded breakouts a lot in August, you got killed. You bought the high of the range, sold the bottom of the range, and you just got beaten to hell. But again, this isn't a super objective trading plan at all, or even how to set it up for a business, but a really good outline of questions you have to ask once you get going. Know where your expenses are, know what commissions are, know what percentage of your profits are going, when you're profitable, are going to the broker and the exchange. So you could tweak that. Know that there's light at the end of the tunnel if you think the commissions are too high, because there are options to lower them, but you have to start making money and you have to start trading big size, and you're not going to start trading bigger size until you start making money. I'm going to go over a couple questions. So that's a good way to put it. It's more of a business plan, and a trading plan is underneath that business plan and different. Here's the key to a trading plan. First of all, most people have one and aren't really adhering to it, but they think they are. This is what's good about questions that come out of of a meeting that are really profound. It's like you talk about a business plan, you talk about a trading plan, you talk about why, they always talk about, well, if you just had a plan, you could stick to your plan. But most, they have a plan that isn't lined up with the kind of market it is, right? And so that's why it's working, and they get killed because they can't adjust. So you have to have the agility, to use your word, Tom. You have to have the agility to adjust. Being around other people help you do that, number one. Experience will help you do that, but being around people helps you the most. What was the other thing I was going to say, though? Having a plan that you think you're trading and you're really not, that really stinks, because now you're quantifying something that are going to give you, it's going to give you stats and feedback that aren't even accurate. I mean, you're going to throw away a trading plan that probably would have worked had you just traded it, but you thought you were. That's where review comes into play. Accountable review. You guys know this. It's a tough business. That's why the upside is so sky's the limit. Watch last week's meeting if you haven't already. It was a real good one. Bunch of guys contributed. Dave, George, Tom, Jeremy, Peter. So that's all I want. I just want to get this on the record because we didn't have one in track 4 and we needed it. A lot of people, the bullet points of this meeting is don't get discouraged with expenses because there's a way to bring them down. Also, don't have an unrealistic monetary goal, all right? That's the takeaway. You're a ditch digger with a one lot. You can make money as a ditch digger, but you're not going to make the same kind of money as a lawyer or a doctor. Don't get disappointed. You got the shovel in your hand and you're digging ditches that you can't afford the same car a doctor or a lawyer could afford. You can make money as a ditch digger. You can make money as an electrician. You can make money as a plumber. But you got to own the business to make the kind of money the owner does. All right, so, of course, Mike, who's come back, Mike the plumber, has a question, and he starts it with off the subject. I love hearing questions. Off the subject. What are we going to talk about? Just to suggest there should be a Tammany Edge website. Okay, thank you. I'll put that in the suggestion box for you. No, there will. That's a good tip. You're welcome, Jim. It's like any other business. If you could keep your expenses under control and you could chip away at this, you'll have moments that just like a market moves like crazy out of nowhere, so can your success. Simplicity. It's not simple at first, but it becomes really simple when you're like, man, why didn't I get that earlier? How many moments have you had in your life? Why didn't I get that earlier? Why didn't I think of that? But why didn't I get that earlier? Like, why didn't I see when I was trying to sell it, not me, but some others, that this thing was on a tear to the upside? I mean, nice, long, extended bars. These damn things are on their highs. This is the biotechs. They're on their highs of the session, making higher highs, and we're still 6 or 7 points from our close. From our open. So they're not only above their open, they're making new highs, the biotech sector, and we're 7 points away from where we started. Something's got to give. Be careful being short. This thing could pull us up. Oil. Here. That's not oil. No, this is the DAX. The DAX in the white. You don't see it in here, but if you're watching on the dome and watching the DAX, this move right in here that went down, was it through 80? Actually, I think it was this one. There was a big sweep in here in the DAX that made a tradable moment here in the S&P. So if you were leaning to the short side and you're watching the DAX, this SOB got you short, no heat. And that could be a setup. Use an ancillary to get you in. Market really picked up price action after 9 o'clock and all in here. This is the ES in red. This is the DAX in white. So your trading plan is what you're using to create and, more importantly, execute a bias. And then the business plan is what we kind of went over today. Understanding a sweet spot for account size. You could have too little, you could also have too much in the damn account, and you're not going to trade it effectively. I think someone had said, if you got 100 grand in your account, take 10 of it, create a segregated account within, and your broker will and can do this for you. Create a segregated account, just be a different account number under your name, and only swipe 10,000 in there and trade that. You know you got 90 in the other account, but you're only trading this 10 because you want to have a little bit of accountability, a proper valuing of money. If you overvalue it, you're too nervous. If you undervalue it, you're too calm. You want to be a good steward of your money when you're thinking of marketing, right? A good steward of your money when you're thinking of donating it to charity, when you're thinking of hiring an employee. You got to be a good steward of your money when you're making or losing it, risking it. All right, guys. Hope this helped some of you. I'll record it, or I did record it. I'll have it rendered and put up to the website soon.